Okay, Anthony Molinaro, this was your idea. Let's talk about this. See, I'm putting it on you.
Yeah,
So this was, this topic came up because at a past Rockstar Economic Update, we talked about these points, and you had a couple questions or a couple thoughts around them. So let's just go through it. What's on your mind?
Yeah, so you can only spend your time doing one thing in life at a time. So what should somebody be spending their time on if they're trying to live life on their terms? There's your career, like all the things you've laid out that we're going to go through. There's your career. There's investing in real estate. There's starting a business. What do you spend your time on and why?
Yeah, got it. Okay, so now I see where you're coming from. So the way I think Nick and I would both look at that, and we'll share a slide on the screen here that you see it, is that we kind of have this concept, which I don't think is unique to us. We probably read it in a book or heard it a bunch of times, but it was, what is your personal risk curve? So for us, instead of chasing the shiny object that might make us a 10x return, or, kind of when we were younger, everyone goes through that phase of, I'm just going to put up a website. In my era, it was like, I'm going to put up a website and sell reports on the internet, and I'll just live on the beach, and I'll have this online business that makes me like $1 million. That was like from the year like 1999 to like 2005. That was the era of just put up a website and sell reports and you'll just become a millionaire.
Was that the 4-hour work week? Was that?
That was, I think, 4-hour work week
out?
was like 2000, I want to say 2006 or 2007.
Okay.
So yeah, I guess Tim Ferriss was kind of going through that, and then he wrote the book at the end of that kind of phase of his own life.
Yeah.
But that was that era. But every era has it. Like I feel like right now, a lot of people today in 2022 are like, well, I'm just going to buy some NFTs and I'll 10x these NFTs and I'll just sit back and like kind of make money. And I'm not saying you can't do that. There are people that have done that. Like if you look at the Bored Ape Yacht Club, and I think now the Mutant Apes and the the CryptoPunks, like you can totally do that. But what Nick and I kind of found was that you need to build a risk curve consciously, to use, I think, words you just used before we started recording.
Yeah, or intentionally. Like
intentionally.
You can only spend your time or the maximum amount of your focus and energy on one thing. So, what should that be? It's basically just laying out a framework for how you're going to live your life and what you're going to focus your time on in like the next 5 to 10 years.
Yeah. Okay. So I think we'll ask Alex to put this slide up right here. And I think this is the way that we would look at it. So if you see this on your screen here, we would say map out on a piece of paper your own risk curve, just like a line like this, and right at the bottom risk and at the top return, and then map out like what yours looks like. So I think like for most people, it would look something like this, that, very low risk, and maybe to me a lower return would be like traditional, education. And then you get into your job. It's a little bit more risk having a career than just kind of sitting at home.
Yeah.
But the return's, a little higher because now you're making money. So you're getting a financial kind of return. Yeah. And then
so the return scale, this is financial return.
Financial return in this. Yeah. I'm not talking emotional or like a spiritual return.
It can be a personal return, obviously, going to school.
Yeah. Different satisfaction is going to come from different areas for sure. This is kind of financial. And then the career, after the career, it might be like, well, I'm going to get an investment property or something like that. And then after that, it might be, well, I'm going to open my own small business that I'm going to then turn into a medium business and a big business.
Yeah.
And then after that, it might be doing some investments like Bitcoin, right? And I say it like that because a lot of people think, well, that's kind of crazy stuff, this Bitcoin stuff. But what I found is that when you map it out like this, at least now you can make some choices of like, where are you focusing your time? Are you focusing your time on something that has very low risk and a lower return? So for me, that would be my career, a career. Do you have any focus in these other areas that are slightly higher risk, but have higher return?
Yeah.
But if you have a base of education and you have some income coming in from a career, why are you not spending some of your time further up the risk curve? Well, where I find most people are like either way up the risk curve and they don't have anything at the base. So they're not focusing any time on education or getting, some kind of career. And they're just focused way up the risk curve all the time. Mm-hmm. And if they don't hit the home run in an investment, they're getting nowhere. Mm-hmm. So I think you kind of have to build it. And I think then for myself, if I flip this now, and look at, my personal risk curve, mine doesn't look so neat anymore because I think after you get some experience, I look at things completely differently. So for me, the risk and return of a traditional education would be here. A career to me can have a slightly higher return if you go in the right space. So something Nick and I both learned is if you choose a career in a trending industry. So for right now, it would definitely be areas like real estate is definitely trending. The whole digital asset space, however you want to call it, definitely trending.
Yep.
If you just naturally choose a career in those spaces, you're going to get a higher financial return because they're trending in the economy. So more money is piling into those spaces,
Yeah.
right? And I say real estate. I don't know if someone's listening to this. Who knows where someone's listening to this? We're speaking in the Toronto area. Definitely, it's that for real estate here.
For sure.
But it's higher up the risk curve because you can lose your job.
Yeah.
So it's not, to me, lower on the risk curve. To me, it's higher up the risk
Which
curve.
is crazy because everybody just traditionally sees the career as the number one, safe way to go, as the lowest risk, highest return, including the banks for qualifying for real estate. Like if you're self-employed, you could be earning the same amount of income. You could
Yeah,
be
it's a
earning
good point. I
more
never thought of
income,
it that way.
but the banks still look at it like anybody else looks at it. Like the career is the low risk thing. But it's like all things being equal, I'd rather put my money on the guy who's making the same amount of money doing his own thing, owning a business, as opposed to the guy earning a salary.
Yeah, that's a good point. And I'm just trying to think of the bank's point of view, because the banks, they look at you and I as how secure is our cash flow stream, because they're lending on our income. They're using the real estate as the collateral, but they're lending
Yeah.
on Anthony Molinaro's income,
You're being qualified on the income.
on your income.
Yeah.
And they look at you as an employee with T4 income as more secure cash flow than somebody who has their own small business or self-employed, which to me is ridiculous, but that's the way they're coming at
Yeah,
it.
because you don't have control over the rest of the company. If you're self-employed, you have full control over your company, and you have the incentive is there.
I've never really thought this. I guess they're just thinking most people are useless in business.
What's
what's their analogy? Like the auditors must just think most people are going to suck at business.
Yeah.
So we're just not looking at self-employed income as better than employee income or T4
Yeah, and
income.
to me, I'm like, that person has skin in the game. Like they have the incentive to perform better or just to go all in
Yeah.
on what they're doing, as opposed to the guy who has a career. If I lose my job, I'll just apply to a new one. So I actually really agree with the career.
Yeah. Yeah, cool. Yeah, so that's how we look. I'm just trying to think where this actually sits. Maybe even it's like further up the risk scale. Like maybe it's like, further along to the right than I have it here.
Yeah.
But anyway, okay. So then now I look at these other areas, and a rental property to me now, after having years of experience, this is like very low risk the way we look at the analysis and do kind of rental properties. And the return is really strong. So I would move it way over to the left, whereas I think most people think it's like, further to the right on this graph here or this chart here and further down the risk scale. I think it has very little risk, and small business might have even more of a return. But to me now, I don't think it's very risky either. So
But more risky than a rental property.
maybe it's not even a risk, but it's harder.
Yeah.
Like I look at a rental property as a business.
Yeah.
To me, if you own a rental property, you own a business. It's just you're in the business of providing shelter.
Yeah, and it's almost like a franchise. Like if you find a place like Rockstar where you can learn these systems and stuff, and you just follow the system for implementing, how to fill a rental property with tenants, how to buy it, how to do a duplex conversion, you're just following a system just like a franchise.
How to understand the tenant laws in Ontario. Once you have all this knowledge, the risk of it is low to me.
Yeah, you're not reinventing the wheel. With the small business, you can also follow systems and stuff and take training courses on how to start different businesses. But I think you're right. Like, it's just a bit harder.
It's a bit hard. Shelter is a need. So if you buy a rental property in a good area, you're likely going to find a tenant. So I guess that's why I have it lower on the risk scale. And a small business, it's not satisfying a need in and of itself usually. You have to convince someone what you're selling is useful, even if it is real estate. You still have to convince someone that like, hey, do business with me and not the guy or girl down the street, right? So there's just a little bit more risk to it, but the return on it could be even higher. And the way I'm looking at that is that, with a property, you're putting in some down payment money. Yeah. With a business, you can pretty much start from zero. And that's why I'm saying the return can be higher.
Yeah.
Right? Not that businesses don't need an investment as well. Some definitely do.
Okay. you have continuing education up top. Just like as a young guy, I see that. And I think for any person my age who says I can't afford a rental property, they might agree with the risk return scale here. They might agree with it, but if they can't qualify for a rental property, I think continuing education is like the best
is
thing
key. At one point, Nick and I added up in I think it was our late 30s, we had spent hundreds of thousands of dollars on our continuing education because we added up like flights to conferences in the US, hotels, the meal, like everything, the tickets to go to different events, whether it was business building, marketing, mastermind groups, the amount of time we spent in our own education, paid for newsletters. At one point, I think Nick and I had a dozen paid for newsletters, either coming into our email. Like I remember paying for multiple newsletters on search engine optimization in the early 2000s when that was like the thing. But like investment newsletters, business building newsletters, paper-based newsletters that would come into us, CD programs that would come into us. And I think we stopped counting at like $350,000 or something, which is ridiculous. So now today, a decade after that, I don't even want to know what the number is, but that's been the highest return. Like if you even look at, I'm sure we're going to talk about Bitcoin in a second. We got into Bitcoin because of our own curiosity around money and what money is. And that got us into Bitcoin in March, April, May of 2020 at a really good time to get into that space. But that's all a result of curiosity and our own kind of education.
Yeah.
Business building and the success of Rockstar at this point came from starting other businesses and kind of failing at them. Not kind of. Absolutely not carrying on with those businesses and failing at them, but then learning, studying marketing and sales systems and, the economy, interest rates, and then having a much better idea of how to run a business. So continuing education is like, to us, everything.
But I guess eventually you have to put some money into an investment. Like you can invest into learning about investing and stuff, but eventually you have to invest into.
Yeah, this is something I find a lot of people spend a lot of, like there's a progression, right? I think a lot of people spend a lot of time in continuing education around motivational or personal development, and they never get past it. Like if you're lacking confidence or you're scared of sales, then you need personal development content in your continuing education. Authors like Napoleon Hill and Og Mandino and, like all the classic Tony Robbins, all that stuff, that really helps you build up a confidence that, wow, I can achieve things that I really want to, believe for my life. I can achieve those things. But you need to transition eventually from reading those books. And a lot of people just get stuck in that world forever to actually putting some skin in the game, like you're saying, and saying, okay, I'm going to start a business. For me, it was, what am I going to put a stake in the ground and say, this is the business I'm going to focus on. This is what I'm going to be known for. And it became real estate. But I was almost forced to make that decision. It wasn't like this decision that came from passion. It was like, okay, I actually need to do something now. I've started a bunch of online businesses, didn't really succeed the way I wanted them to. What am I going to try now? What am I going to absolutely be known for? And I literally remember having the visualization that I'm going to put a stake in the ground and I'm going to be known for real estate. Let's go. And Nick joined, and we, now here we are with Rockstar Real Estate.
Yeah. Bitcoin, the last one.
Yeah. The reason Bitcoin's up there is just because I think you and I both love Bitcoin.
Yeah.
So we
absolutely.
But I guess the message is that a lot of people think it is way further right on the risk chart here. And to us, once you understand something and you read, and for Bitcoin, you need to spend I feel like you need to spend tens and then hundreds of hours studying this thing. Yeah. But once you study it and the volatility of the price, like when Bitcoin went up to, I think 63 or 64K US in early 2021, and then it came in the summer of 2021 all the way back down to 30, I still didn't think it was risky, even with that price volatility, because I understood what it was.
Yeah.
And for me, I was still buying at 30K. I never considered selling it at all, even though it dropped, I guess, more than 50% of its value.
Because you had the conviction from hours and hours
of studying and reading money. And this maybe came from the previous 10 years of like studying gold and interest rates and beginning to understand money and then going down the Bitcoin rabbit hole. But I guess the message, the reason I have it on the chart there is that once you've done your education, things that other people perceive as risky and they don't understand them, and on their risk curve, they would have them way to the right here. I don't really have that as a risky investment in my life. I don't classify it as a risky investment. Yeah. And I think the upside return is still astronomical. So that's why I have it, on that part of the chart there.
Yeah.
To me, it just makes sense that it's there. The return is super high and the risk is maybe higher than like spending time on your continuing education or a rental property,
Yeah.
but it's really not that high.
So I guess moral of the story is everybody should draw out their own personal risk curve.
Yeah. Yeah.
Yeah.
And I think it's back to your point that I think most people aren't intentionally analyzing how they're spending their time, and how you started this discussion about where do you focus your time. You only want to focus your time so much on some things that have lower risk and lower return. Once you have some of your base set in life, so once you have some income coming in and you have like a place to live, you can pay for rent, or you bought your own house. Like once you have some of the basics covered, in my mind, you eventually want to move further up the risk return curve, because you're never going to outpace things like inflation or some of the systems that we currently have to outpace to live life the way you want to live it.
Yeah, for sure. It's like survive and then thrive.
Exactly. Yeah. Anthony, thanks for doing this. This was a great idea.
Yeah, it's good.